In this video, I'll explain what a traditional IRA is, who they're for, when to contribute, and where, why, and how to open one. A traditional IRA is simply a U.S. retirement savings vehicle by which investors contribute pre-tax income. That money grows tax-deferred, and the withdrawals later in retirement are taxed as ordinary income. The traditional IRA was established in 1974 by the Employee Retirement Income Security Act. IRA stands for Individual Retirement Account. As the name suggests, this is an account designed to help individuals save for retirement. Whereas an account like a 401k is tied to your employer, anyone with earned income below the limit can open a traditional IRA on their own. Contributions may be tax deductible depending on your income. We'll cover income limits later. So how does a traditional IRA work? The main function of the traditional IRA is that contributions are made with pre-tax dollars. In most cases, they are tax deductible. Those contributions are allowed to grow tax deferred, and withdrawals later in retirement are taxed as ordinary income. In other words, contributions to a traditional IRA are taxed on the back end and not on the front end. Those contributions must be made in cash. There are limits imposed by the IRS for the amount of annual contributions that can be made to a traditional IRA. We'll go over these contribution limits in a bit. Traditional IRAs have what are called required minimum distributions, or RMDs. This means you have to start withdrawing after age 73, whether or not you actually need that money. This is because Uncle Sam wants to collect on his tax revenue that you've avoided up to that point. Account holders can start withdrawing without penalty at age 59 and a half. Withdrawals before that age will incur a 10% penalty plus taxes. There are also special cases that allow for the early withdrawal of earnings without penalty, including a first-time home purchase. You can withdraw up to $10,000, higher education expenses, medical expenses, death, disability, and substantially equal periodic payments. Consult your tax professional if any of those apply to you. Also note that you can open a traditional IRA in addition to an employer-sponsored plan like a 401k, but having an ESP reduces the amount the IRS allows you to contribute to a traditional IRA. If you leave an employer, you'll also usually have to roll over your 401k into a traditional IRA. You have a wide variety of things you can invest in inside a traditional IRA, including mutual funds, ETFs or exchange-traded funds, stocks, bonds, money market funds, certificates of deposit or CDs, cryptocurrency, and more. You can even hold investment real estate in a traditional IRA. A traditional IRA can be created anytime, but contributions for the current year must be made by the owner's tax deadline, which is typically April 15th of the following year. Note that contributions must come from earned income, which could include wages, salaries, commissions, bonuses, and business income if self-employed. The following sources are not eligible: rental income, interest income, pension income, annuity income, stock dividends, and capital gains. Eligibility to make tax-deductible contributions to a traditional IRA is determined by your modified adjusted gross income, or MAGI for short, and your tax filing status. If eligible, you can deduct contributions whether or not you itemize deductions on your tax return. If your income is too high, non-deductible contributions can still be valuable because that money is allowed to grow tax deferred. At this time in 2024, the annual contribution limit for individuals for a traditional IRA is $7,000 if below age 50 and $8,000 if age 50 or older. Those limits are $500 higher than they were in 2023. The current annual income limits to be eligible to deduct traditional IRA contributions in 2024 are $87,000 if single and $143,000 if married filing jointly. Phase-outs for reduced deductions begin at $77,000 if single and $123,000 if married filing jointly. Also note that your traditional IRA contribution cannot exceed the income you earned for that year. To recap, traditional IRA contributions are made with pre-tax dollars from earned income. Withdrawals can only be made after age 59 and a half without penalty, or before that age in some special cases. Qualified withdrawals after age 59 and a half are taxed as income, and required distributions must begin after age 73. Advantages of the traditional IRA include a variety of investment options, no income limit to open the account, possible current year tax deductions for contributions, tax-deferred growth, and an obvious benefit for those who will be in a lower tax bracket in retirement. Disadvantages of the traditional IRA include withdrawals being taxed as ordinary income, taxes and penalties on early withdrawals, required distributions after age 73, reduced deduction eligibility for higher income earners, and a low contribution limit compared to a 401k. Most brokerages like Schwab, Fidelity, Vanguard, etc. offer traditional IRAs. You'll just choose which one you want when opening a new account. My choice is M1 Finance. The broker has automatic deposits and withdrawals, a sleek mobile app, and dynamic rebalancing of new deposits, among other things. I wrote a comprehensive review of the platform that I'll provide a link to in the description. You may prefer the Roth IRA. Click here to watch my video on it. Do you have a traditional IRA? Are you thinking about opening one? Let me know in the comments. Thanks for watching.